Good evening, guys. Welcome back to the SKGS Incorporated YouTube channel. I'm your host again, SK, and since we are on season 1 of the FinLit series, we are going to be doing episode 2 today. Episode 2 is going to be based on 4 different topics. These 4 different topics include: number 1, how to open and close a trade, whether it's a buy or a sell. And then number 2, what is a pip and how to calculate a pip. Number 3 is going to be, what is a lot size? What is a lot size? How does it work when opening your trade? And then number 4, and lastly, this one is going to be very important. This is actually something that a lot of people tend to look past, but we're going to be talking about what is a free margin or margin. How does that affect your trades, and how does that help you to calculate your risk management? Okay, so guys, basically, when opening a trade, there are 3 different types of orders that you can open with a trade. So when opening a trade on Metatrader, right, on your platform, whether it's Metatrader 5 or Metatrader 4, you basically go and click the option there, right? And then number 1, the first type of order that you get is a market execution order. This is an instant order where you take the trade and then the trade instantly is executed into the market, right? And you can either buy or sell. So I'm going to show you both examples right now. So I'm going to buy. And as you can see, the trade for buy went in, right? Let me just close this quickly. And then now I'm going to show you a sell. Same option, market execution, and then this is a sell. So when you sell, you just press this button and then you have your sell, right? And then that's basically how you open a market execution order. Also, when opening your market execution order, right, if you want to set your take profits, when you set your take profit, there's this option here on the right, and you press this button here, and then it'll show you the price of the whatever price level the trading instrument that you're trading is at. So if you want to set a take profits, you can just type in whatever take profit you want to set. We'll just use 15,400 for this because this is a NASDAQ example that we're using. And then when you enter the trade, it'll show the take profits automatically. So now when you want to do a stop loss, right, you go into the same trade that's open, you press this option and then you press here, and then the other side, the left side, is going to be your stop loss. So your stop loss has to be below the price that you entered at, right? So for example, I'll just make it 15,100 and then click here, and then now I have my take profits and my stop loss. And then the same thing goes for a sell trade. You press this option here in the top right corner, and then when you set your take profit for a sell, your take profit has to be below the price that you entered at. So we're going to set it at 15,100 again, right? And then we're going to sell. As you can see, our take profit is there now at the bottom. And then for your stop loss on a sell order, it has to be above your entry price. So for example, we're going to make it at 15,400 again. And then there you go. Then our stop loss is automatically entered there. Okay, so now guys, we're going to do the second part of opening a trade, which is the second type of trade that you can open, being a pending order. So basically how to open a pending order is you press the top right corner of the screen, and then you press here, right? Then it will give you all the options. So we're going to use a buy stop and a sell stop for this example. So we're going to set our buy stop. You're going to press there, right? And then how to set a buy stop is that you're setting a price for the future, right? So if you think that price is going to reach a specific level in the future, then you're going to set that price, and then your trade will only activate
when the price reaches that level. For example, price right now is at 15,300, right? So we're gonna set it at 15,400 because we think that price is gonna continue buying until it reaches that level, right? So then that's gonna be our pending buy stop order. And then if you wanna set a take profit, it's the same as the previous example that we showed, where if you set a take profit, your take profit has to be above the entry price that you entered. So for example, we're going to make our take profit at 15,500, and then your stop loss has to be below your entry price. So our stop loss is going to be at 15,100, for example. And then I'll show you how it looks. So you see that the order hasn't activated. It's going to activate in the future when price reaches 15,400 as we set it. And then this is how it's going to look like. Okay, so now I'm going to show you a sell stop order. So for a sell stop, we do the same thing that we did before. You're going to click the top right corner of the screen, and then you're going to click here, and then you're going to go to sell stop. So a sell stop is basically another future order which you're going to set. So how a sell stop works is that a sell stop, you set it at a price where you think that the price is going to get to. For example, if you think that price is going to sell to a specific level, you're going to set it at that level. So you're going to click here, and then let's say we think that price is going to sell, right? We think NASDAQ is going to sell in the future. So we're going to set our pending order at 15,200. So we think that NASDAQ eventually is going to sell and it's going to reach 15,200. And then this order will only be activated when NASDAQ reaches 15,200. And then for our take profit, obviously your take profit has to be below your entry price when it comes to a sell. So our take profit is going to be, for example, let's say we're going to make it 15,100 because we think that NASDAQ is going to sell all the way to 15,100. And then your stop loss has to be above your entry price. So for example, we're going to set our stop loss at 15,400, and then you press place, and then this is how it looks like. This is a future order, right? It's not activated yet. It's going to activate when price reaches the entry price that we anticipated to enter. So this is how it looks. So guys, that's a pending order, a buy stop or a sell stop. That's how that works. Okay, so guys, now we're going to get to the third part of topic 1, which is going to be a buy limit or a sell limit order. Okay, so now we're going to press the top right corner of the screen, and then we're going to press here, and then as you can see, we have a buy limit and a sell limit. Now we're going to click buy limit. How a buy limit works is that if you know that price is going to drop, right, to a specific level, you're going to set a future trading order at that level where price will only buy when it gets to that level. The trick with a buy limit order is that you can only set the buy limit order below the current price. So when price drops, it'll go down and then it'll activate that buy limit, and then price will go up. Price will start buying, right? So how you set a buy limit order is that you click here at price, right? So price right now is currently at 15,312, right? So we're gonna set our buy limit order at 15,100, okay? And then price will only activate when it gets to 15,100. If you think that price is going to go down and then come up again, right, that buy will only activate when price reaches 15,100 exactly. And then with a buy limit, how you set your take profit is that your take profit has to be set above your buy limit because you think price is going to buy, right? So when price buys, obviously the price rises. So now we're going to set our buy limit take profit at 15,300, let's say. Then our stop loss is going to be set below our entry price with the buy limit. So as you can see, the buy limit is at 15,100, so we're going to set our stop loss at 15,100. Yeah, so you can see this is how it looks. The trade has not activated yet, but when it does activate, it will change. So this is how it looks on the chart. So as you can see, if price decides to sell and it goes down and we think it's going to buy at a specific level, then the buy limit order will be activated. Okay, so now we're going to a sell limit, guys. So how a sell limit works is that we're going to click the top right corner of the screen and we're going to click sell limit. So how a sell limit order works is that you can only set a sell limit order above a specific entry price. So how it works is that, for example, price right now is at 15,319, right? So if you think price is going to go up to a specific price level and then it's going to automatically sell at that price level, then you're going to set a future trade order. So this is how this works, guys. So currently right now price is at 15,319 and we're going to set our sell limit order at 15,400, right? And then price will only activate and sell when price gets to that level. And then our take profit. When you set a sell limit order, your take profit has to be below your entry price. So we're going to set our take profit at 15,300. And then your stop loss for a sell limit order has to be above your entry price. So we're going to set our stop loss at 15,600, let's say. Then we're going to press place. Then once it's placed, this is how it looks. As you can see, it hasn't activated yet, and it will only activate when price reaches that level. So this is how it looks. So if price keeps going up and it reaches 15,400, it'll activate and then it'll start selling. It'll activate our sell order, our sell limit order.
Okay, so now guys, we are on topic 2. So topic 2 is about what is a pip. So a pip is a specific term used in Forex to describe the amount of movement that a price of a specific trading instrument has made up or down, right, at a specific price value. So for example, as we're using NASDAQ right now, if NASDAQ moves from the price of 15,300, for example, right, to 15,400, those are specific amounts of pips that NASDAQ has moved. And each one of those pips are worth a specific amount of money, right? And then another example is that if NASDAQ goes from 15,300 to 15,200, right, if it drops, then that is a specific amount of pips that NASDAQ has dropped. And those pips are worth a specific amount of money. So that's basically how pips work. And I'll just show you a few examples of how to calculate pips.
Okay, so guys, this is topic 2, right? Which is what is a pip and how to calculate a pip. Now let me just show you guys. So since in this video we're using NASDAQ for explanational purposes, I'm going to show you how to calculate the pip value for NASDAQ. So as you can see, guys, written over here is the pip value for NASDAQ. So these examples I'm going to be showing you are based on South African brokers. So how you calculate pip value for NASDAQ on South African brokers is, for example, if you open one trade at a lot size of 0.01, that will equal to $1. That's how much that pip will cost, $1. Okay, let's say if NASDAQ is at 15,300, right? And then you buy NASDAQ at 15,300 and you anticipate it to go to 15,400. How that works is that if 15,400 is your take profit, right? You'll say 15,400 minus 15,300, and then that'll give you the amount of pips that NASDAQ has moved, which is 100 pips. And then how to calculate that, as we go back here again, as you can see, each pip movement on NASDAQ is worth $1, which is 15 Rand, right? So now it's going to be 100 pips of movement times 15 Rand, right? Which will give you about 1,500 Rand profits. That's how that will work. And then let's say NASDAQ is at 15,300 and you sell NASDAQ, right? And then your take profit is 15,100. How you calculate that is going to be 15,300 minus 15,100, and then that'll give you the amount of pip movement that NASDAQ has made, right? Which is 200 pips, because 15,300 minus 15,100 is equal to 200 pips of movement, right? So now how you calculate this is that we go back here, right? And then as you can see that NASDAQ with 1 pip or 1 point is worth $1, which is about 15 Rand, right? So now if you're in South Africa, you're going to do 200 pips of movement times that 15 Rand, and then 3,000 Rand will be your actual profit.
Okay, so guys, now that we are on topic 3 of this video, topic 3 being lot size. What a lot size is? A lot size is the specific amount of leverage that your broker allows you to use when opening a trade, right? Based on the amount of money that you have in your trading account, right? So now, how a lot size works is that when you open a lot size, specific lot size can only be opened based on your account balance and based on the amount of leverage that your broker allows you to have. Okay, so guys, now that we are reaching the end of this video, right? Topic 4. Topic 4 is about margin or free margin, right? So what free margin or margin is the amount of money that you need in your trading account in order to open a trade at a specific lot size. So, for example, each lot size that you use is a specific amount of money that you need to have in your trading account balance in order to open that trade at that specific lot size. So all of these things, they tie into each other, whether it's pip value, lot size, value, and margin, obviously. All of these three things tie in together in order to open a trade.
So when you calculate free margin, guys, again, we're going to be using an example of a South African broker, right? And we're using NASDAQ again. So for NASDAQ, as you can see written on the screen, guys, if you open one trade of NASDAQ at a lot size of 0.01, which is the lowest lot size, the margin value that you will have to have is about $28. So as we said again, margin value is the amount of money that you'll have to have in your trading account balance in order to open that trade. So to open one trading position of NASDAQ at a lot size of 0.01, you need $28, which is about 415 Rand in your trading account to open that trade. And then how lot size works is that if you increase your lot size, for example, from 0.01 to 0.02, then the margin value is doubled. So as we can see, if you open one trade of NASDAQ at 0.01, which is the lowest lot size, the margin value is $28, which is about 415 Rand. If you double that and you open a higher lot size, which is 0.02, then the margin value will be doubled. Then instead of needing $28, which is about 415 Rand, to open that one trade, then you'll need about $56, which is about 830 Rand in your trading account balance in order to open that one trade of 0.02 lot size of NASDAQ.
Okay, so guys, that brings us to the end of this video of episode 2. So guys, if you gained any value from this video, make sure you subscribe, like, comment, and share the content.